Welcome to The Explainer. We're going to demystify the stock market today. What is it? Why should you even care? And how does the whole thing actually work? We're going to break it all down by following two really simple stories that honestly make everything click.
Okay, so let's kick things off with a problem that I guarantee every single one of us has felt. You ever notice how your money just doesn't seem to buy as much as it used to? That's the shrinking power of our money. To really get this, let's follow the story of a hard worker. We'll just call her the saver. All right, so here's our saver. She's a total pro, earns a good salary, and she is super diligent about saving money every single month. But, and this is a big but, she's just stashing it all away as cash, like under the mattress or in a simple savings account. And because of that, she's about to go head-to-head with this powerful, invisible force.
So let's fast forward 20 years and see what happens. She gets a 10% raise every year, which is fantastic, right? But here's the catch. The cost of everything, food, rent, gas, that's inflation, and it's going up by 8% a year. So after 2 whole decades of hard work, she's saved up 1.7 crores. Now, that sounds like a ton of money, but when you account for how much more expensive everything has gotten, that giant pile of cash will only last her about 8 years in retirement. 8 years! After a lifetime of saving, she's in real trouble.
Okay, but this is where it gets interesting. This is where one small change can make a world of difference. What if, instead of just letting that cash sit there, our saver had invested it, put it into something that could actually grow faster than inflation? Let's just say, for example, it grew at about 12% a year.
Well, the result is absolutely staggering. Seriously, just by making that one change, her savings don't just grow, they more than double to over 4.2 crores. Now her future isn't just secure, it's comfortable. That huge, massive difference, that is the power of putting your money to work for you. It's the power of getting a return on your investment.
And that, right there, shows you why investing is so important. It's not some complicated thing for only the super rich, no way. It's basically the most powerful tool any of us have to make our money work for us. It's how you fight back against inflation, it's how you build actual wealth, and it's how you can afford those big life goals. Buying a house, paying for school, or actually being able to retire without worrying.
Okay, let's switch gears a bit. We've got our second story now, and you'll see how this all connects. This one isn't about saving money, it's about making something new. So let's meet this really ambitious entrepreneur who's got a brilliant idea.
So this guy, our entrepreneur, he wants to start a t-shirt company. But not just any t-shirts, we're talking high-quality, organic cotton stuff. The designs are awesome, the quality's incredible, but he has that classic problem every new business faces. He needs money, what we call capital, just to get the whole thing started.
So what does he do? Well, he pulls together all his own savings, and he gets a couple of friends to chip in too. In the business world, these first investors are called angel investors, and in return for their cash, which is known as seed funding, they don't just get a thank you, they get a piece of the company, a little slice of the pie. And these little pieces, we call them shares. They literally represent ownership in the business.
And guess what? The t-shirts business is a massive hit. But to get bigger, you always need more money. So at each stage of growth, they bring in new investors. First, a venture capital firm, a VC, invests some money so they can expand across the whole city. And then, when they're ready to go national, a way bigger private equity fund, or PE fund, comes in with a huge chunk of cash. And every single time, the company is selling off more of these shares to get the money it needs to grow.
Okay, fast forward again. The company is a huge success. They have stores all over the country. But our founder? He's not done yet. He has an even bigger dream, to take the company global. The problem is, that takes an absolutely enormous amount of money. So much money that even those big PE funds can't foot the bill. So, how in the world did they get that kind of cash?
The answer is something called an initial public offering. You've probably heard of it, an IPO. This is the big moment. It's when a private company decides to go public. They basically open the doors and offer to sell their shares to everybody, to the general public, me, you, anyone.
Now, going public is brilliant because it solves two huge problems at once. First, obviously, the company gets to raise a ton of money for those giant projects, like our t-shirt guy's dream of going global. But second, it gives all those early investors, remember the angels and the VCs, it gives them a way to finally sell their shares and, cash in on their bet. It's their payday.
And this is the magic moment. This is where our two stories, the saver who needs her money to grow and the maker who needs money to build, finally meet.
So, on one side, you've got our awesome t-shirt company. It's a proven success, it's making money, but it needs a huge cash injection from the public to get to that next level, to chase that global dream.
And on the other side, we have our saver. And she's learned a valuable lesson, right? She now knows that to beat inflation and build real wealth, she has to invest her money in great, growing companies. And what's the bridge that connects these two? It's the stock market. That's all it really is. It's just a marketplace, mostly electronic these days, where our saver can take her savings and buy shares in the t-shirt company's IPO. She becomes a direct investor in that company's future.
Now just stop and think about what that really means for a second. When our saver buys a share, she's not just lending the company money. No, she is buying a tiny piece of the actual business. She is now a part owner. And because she's an owner, she gets to share in the company's future success, its profits, its growth, all of it.
All right, so the IPO is a huge success. The t-shirt company gets its money, and our saver now officially owns her shares. So, what happens next? Well, welcome to what we call the secondary market. From this point on, the company's shares are being bought and sold constantly between millions of different people. So the price of a share, it's not fixed anymore, not at all. It moves up and down literally every second based on, everything. Company news, how much profit they're making, what's happening in the fashion industry. And really, it comes down to the opinions of all those millions of buyers and sellers.
And in this big market, you'll generally find two main kinds of people. You've got your investors, like our saver. They're in it for the long haul. They buy into great companies and plan to hold on for years, betting that the business itself will grow and become more valuable over time. Then you have traders. They're playing a much shorter game, buying and selling over days, weeks, or even minutes, trying to make a quick profit from all those little price wiggles.
The legendary Warren Buffett. He just nailed the investor mindset perfectly. He didn't get rich by trying to guess what the price would do tomorrow. Not a chance. He built his fortune by becoming a part owner in wonderful businesses and just holding on. As he famously said, our favorite holding period is forever.
So when you boil it all down, the stock market isn't some scary casino. It's actually a really powerful, kind of elegant system. All it does is channel money, savings, from people who have it to the people and companies who can use it to build amazing things. It connects the savers with the makers. And in doing that, it creates wealth and progress for pretty much everyone. So the real question for you is, what role will you play?